Winning Strategy for Cesim Global Challenge, Round 2. Hello, and welcome back to the Cesim Global Challenge simulation. In this video, I'll walk you through the top 10 winning tips and strategies you need for Round 2 of the 2023 to 2024 season. These tips are based on successful teams' real decisions, performance benchmarks, and the data analysis required to gain a competitive edge across all three markets: USA, Asia, and Europe. Let's begin by diving into the strategic data and turning it into actionable decisions. Tip 1. Review the industry overview and AMP. Set your sales forecast correctly. The first thing you need to do before making any decisions is check the industry overview. This gives you a snapshot of the total market demand and performance from the previous round. In our sample data, the USA market sold about 21,900 units, while Europe sold 14,700 units. This data is critical for forecasting your unit sales for the next round. Backhand index pointing right. How to use this? Use these figures as a baseline. Adjust based on your product pricing, quality, features, and promotion levels compared to competitors. Also, take note of the average selling price and especially the average production cost. For example, Tech 1 products may have a cost of $1,800 per unit while Tech 2 might cost $2,700. Use this to determine your minimum pricing floor. You can't price below cost for long and stay profitable. Next, review how many factories are operating in each region. For instance, in the USA, there may be 108 factories total, but only 66 are active. This presents an opportunity. You can adjust production and capacity planning to seize market share where others are underutilized. Tip 2. Analyze financial statements of top teams. The second winning tip is to study the financial reports of your competitors, especially the top-performing teams. What do you look for? Total revenue, who's generating the most sales? Net profit, which teams are actually keeping profits? R&AMP winking and laughing and promotion spending, are they investing for long-term gains? Bar chart example, a top team might have $1.5 million in revenue and $220,000 in net profit. Their promotion spend might be $70,000 and R&AMP winking and laughing investment around $50,000. This tells us that a high-performing strategy often involves balanced spending, not just cutting costs, but smart investment in R&AMP winking and laughing and marketing. Poor performers often skip R&AMP winking and laughing, get short-term profit, but suffer in product quality and future demand. So, set your promotion spending in a competitive range, e.g., $50,000 to $80,000 per market. Allocate R&AMP winking and laughing funds to stay updated with product development, especially if your features are lagging. Tip 3. Use market report to set optimal price and AMP features. Tip 3 is crucial. Study the market report carefully. This report shows real competitor prices, units sold at each price level, product feature levels. Pushpin example: if a product priced at $1,900 sells 2,300 units with 3 features, while a $2,300 product with 6 features sells only 270 units, you learn that moderate pricing and moderate features win more sales. Light bulb insights: customers may not prefer extremely high-end features. Overpricing leads to low sales even with better products. Balance price, features, and promotion. For Tech 2, the same rules apply. A product priced at $2,200 may sell 2,000 plus units with 4 features. One priced at $2,700 with 6 features may fail. So, when planning, use historical price-demand relationships. Compare against the features-to-demand pattern. This gives you the foundation for accurate forecasting and pricing. Tip 4. Check market outlook for demand growth. Tip 4. Go to the market outlook section and check the demand growth forecast. For round 2, you might see USA market, plus 10% demand growth, Asia market, plus 20% growth, Europe market, plus 5% growth. Use this to forecast total market size for next round. Prioritize investment and promotion spending based on growth rate. Light bulb example: If Asia has 20% growth and strong demand, you might shift more marketing budget and production capacity there. Tip 5. Optimize your production plan. This step is often overlooked. Heavy checkmark first, match production quantity to your forecasted sales, not your full capacity. Heavy checkmark second, monitor inventory levels. Too much leftover stock ties up cash and raises storage costs. Too little stock leads to missed sales. Also, use the learning curve. Increasing production gradually over time reduces cost per unit. Set plant upgrades or relocations if needed, e.g., move production to lower-cost countries if labor is cheaper. Tip 6. Plan your R&AMP winking and laughing. Based on market preferences, R&AMP winking and laughing is not about spending more, it's about spending smart. Study, what features are customers in each region demanding? Where are your products lacking compared to competitors? For example, if top-selling competitors offer 3 to 4 features in Tech 1, don't waste time developing 6 features. Instead, match the sweet spot of customer preference. Adjust R&AMP winking and laughing, add or remove features gradually, 1 or 2 changes per round. Avoid high development costs for features customers don't want. Tip 7. Strategic marketing allocation. Each market responds differently to advertising, PR, and price. Tip 7. Allocate marketing budgets proportional to potential ROI. Light bulb example strategy. USA is a mature market with stable demand, moderate spending. Asia is growing fast, high promotional investment. Europe has lower growth, careful selective marketing. Use promotion spending by competitors as a benchmark. If your competitors spend $50,000 to $70,000 and you spend $20,000, you'll likely lose visibility. Balance, advertising, sales, promotion, PR spending. Also consider word-of-mouth effect. Past spending builds brand equity. Diminishing returns if you overspend in a low-demand market. Tip 8. Maximize profit margin, not just sales volume. A big mistake in Cesim is chasing revenue without margin. White heavy checkmark. What to do? Analyze unit contribution margin, selling price, production cost, marketing per unit, track profitability by product and by market. Even if you're selling a lot of units, your profit might be negative if costs are too high, discounts are too deep, marketing ROI is too low. Your goal isn't just sales, it's profitable growth. Tip 9. Monitor competitor behavior. Each round. Cesim is a competitive simulation. Every round, your rivals change prices, update product features, adjust production and marketing. Light bulb tip. Keep a log sheet of their key moves, predict their strategy in the next round. Avoid direct price wars unless your cost structure can win. Being proactive rather than reactive gives you an edge. Tip 10. Set long-term strategy, not just round-by-round fixes. Finally, Tip 10 is about vision. Winning Cesim isn't just surviving each round, it's building strong brand equity, efficient operations, sustainable product lines. Have a clear plan for expanding into growing markets, e.g., Asia, launching new products at the right time, shifting resources based on ROI. Document your strategy. Round 2 to 3, optimization. Round 4 to 5, market expansion. Round 6+, margin maximization and asset efficiency. Conclusion. To recap, here are the 10 winning tips. 1. Check industry overview and AMP, forecast based on past demand. 2. Study financial statements of top competitors. 3. Use market report to plan pricing and AMP features. 4. Analyze market outlook for growth opportunities. 5. Optimize production planning and capacity. 6. Set R&AMP winking and laughing strategy based on feature demand alignment. 7. Allocate marketing budget by market growth and AMP ROI. 8. Focus on margin, not just volume. 9. Track competitor moves and stay ahead. 10. Build a long-term business strategy across rounds. Thank you for watching this Cesim Global Challenge Round 2 Strategy Guide. If you found this helpful, feel free to share or get free support for future rounds by contacting cesimhelp2020@gmail.com. Good luck, and may your team achieve top results in all rounds. Part 2. Hello everyone, and welcome back to the Cesim Global Challenge Simulation Strategy Guide, Round 2 edition. In this video, I'll walk you through a detailed analysis of our decisions in Round 2, including demand forecasting, pricing, production, logistics, R&AMP winking and laughing, investment, and financial planning, along with 10 powerful winning tips to help your team succeed. Let's dive right into the key metrics and decisions that helped us increase our total sales by 63% this round and secure a strong position in all three markets, USA, Asia, and Europe. Winning tip number 1, demand analysis and AMP. Forecasting. The first step before making any decisions is to carefully analyze demand changes from the previous round. In our case, we looked at last round's actual sales volume in each market and product, Take 1 and Take 2. Then we compared that with this round's forecasted market demand to understand the growth trend. For example, in the USA market, Take 1 had modest growth, but Take 2 demand increased sharply. In Asia, Take 1 demand stayed stable, while Take 2 demand almost doubled, growing from around 20% to 35% market coverage. In Europe, Take 1 stayed consistent, but Take 2 demand tripled, rising from 12% to 32% coverage. Right arrow key takeaway: use the forecasted growth trends to adjust your sales and production plan accordingly. Focus your sales efforts on products and markets showing the strongest demand increase. Winning tip number 2, sales target planning per market. Once we understand the demand changes, we set realistic sales targets for each market. In USA, we plan to sell slightly more Take 1 and maintain Take 2 sales, since Take 2 was already strong. In Asia, we aimed to increase Take 2 sales significantly due to the jump in market share potential. In Europe, we maintained Take 1 sales but expanded Take 2 aggressively to match the high demand growth. Right arrow: don't just copy last round's sales plan, base it on demand shifts and your capacity. Winning tip number 3, production planning and AMP. Capacity balance. With demand estimates in hand, the next step is production planning. Here's how we approached it: we checked our internal manufacturing capacity and how much more we could outsource. For round 2, we produced 2,100 units of Take 1, 2,200 units of Take 2, totaling around 4,300 units. This aligned with our estimated demand, around 4,600 units for Take 1, around 4,400 units for Take 2. Right arrow tip: always align your production volume with the adjusted demand forecast to avoid overproduction or stockouts. Winning tip number 4, outsourcing strategy and AMP. Cost management. We also reviewed our outsourcing contracts. Outsourcing costs vary between markets. For example, Asia outsourcing cost $100, Europe outsourcing cost $140. To reduce future outsourcing expenses, we invested in building new plants, especially in Asia. This helps us increase internal capacity and reduce per unit cost in the long term. Right arrow: invest early in capacity to reduce dependency on outsourcing and improve gross margins. Winning tip number 5, R&AMP winking and laughing and feature strategy. This round, we allocated significant resources to R&AMP winking and laughing to improve product features. We spent around $55,000 to upgrade features in both Take 1 and Take 2. We also purchased design and technology licenses to boost product innovation. Each market has different customer expectations. In Europe, customers prefer higher features. We offered 5 features for Take 1, 3 features for Take 2. In USA and Asia, we used 4 to 5 features for Take 1, 2 to 3 features for Take 2. Right arrow: match the feature levels to each market's preferences using customer insight reports. Winning tip number 6, strategic pricing for profit and AMP. Volume. We adjusted prices based on demand elasticity and feature upgrades. If a product had higher demand and upgraded features, we slightly increased prices to boost margins. If we aimed to capture more market share, we reduced prices slightly to gain volume. Example: Take 2 in Asia, reduced price. Demand surged. Take 1 in Europe, maintained price with 5 features. High margin and sales volume. Right arrow: smart pricing equals balance between profit margin and sales growth. Winning tip number 7, logistics and AMP, supply chain optimization. We then ensured our logistics plan matched the production and market demand. We reviewed total production, outsourced units, and import-export flow, exported units from USA to Europe, imported units to Asia from internal and outsourced facilities. Some markets had slight unmet demand, which is acceptable early on. But we are planning new plant capacity next round to fix that. Right arrow, keep logistics aligned with actual sales targets to avoid unnecessary costs or unsatisfied customers. Winning tip number 8, tax strategy to maximize net profit. Don't ignore tax rates when making your profit projections. For example, USA has a lower tax rate, so earning more profit there yields better net income. We balanced profit generation across markets to minimize the tax burden. Right arrow, shift your profit centers to lower tax regions when possible, without compromising demand or operations. Winning tip number 9, financial health and AMP, emergency loan avoidance. We closely monitored our cash position. Last round, we had a strong ending cash balance, allowing us to avoid emergency loans. We kept working capital healthy while still investing heavily in and AMP, winking and laughing, marketing, production expansion. Right arrow, always project cash flow for the next round to avoid debt and preserve flexibility. Winning tip number 10, strategy overview and AMP, long-term planning. Finally, we reviewed the overall strategic performance. Revenue increased from $1.5 million to $2.5 million, a 63% growth. Variable costs rose accordingly, but we controlled manufacturing costs, feature upgrade costs, transportation and AMP. Logistics. We also maintained a high R&AMP, winking and laughing budget, $92,000, to sustain competitive advantage. Marketing and promotion were scaled to support volume growth. Right arrow, this performance is the result of well-aligned, data-driven decisions across departments. Let's quickly summarize our 10 winning tips. Tip # focus area, key action 1, demand forecasting, use last and AMP current round data to set targets. 2, market level sales planning, focus on markets with rising demand. 3, production planning, align production with forecasted sales. 4, outsourcing versus expansion, reduce outsourcing via early investment. 5, R&AMP, winking and laughing, and features, upgrade features based on market needs. 6, strategic pricing, balance price, demand, and margin. 7, logistics, match supply with sales and exports. 8, tax planning, shift profit centers to low-tax markets. 9, financial stability, avoid emergency loans, manage cash well. 10, strategic performance review, track metrics and plan next steps. Thank you for watching this guide to round 2 of the Cesim Global Challenge. We will continue updating this series with new video lectures for each upcoming round, sharing insights, strategies, and real data. Backhand index pointing right. If you need free personal support for round 1 or round 2, feel free to email cesimhelp2020@gmail.com. Blue Book. Also check out the full strategy blog at https://top30tipsforsim.blogspot.com. Stay focused, plan ahead, and good luck in the simulation. Don't forget to like, share, and subscribe for more winning strategies.